You. David Harding is with us now from Winton Capital Management, $12 billion in assets under management, as we said, fifth largest hedge fund in Europe, to talk about what European money is doing and thinking right now. And it's good to see you again. We're just saying it's been about a year since we sat, well, not here, but somewhere else in London and did the shows. So I wanted to ask you, go right to this question. Credit markets seem to be easing, and yet you have companies like British Air and many others coming out and saying there really don't appear to be green shoots. CEOs are very cautious. Which market is right? Are you betting on the market going up or not?
I think that it's a little early to say whether there are green shoots or, which way this situation is going to resolve itself. The managed futures funds which we operate tend to be very, very diversified and trade in things on the long and the short side all around the world. So the picture that our investment is betting on tends to be a mixed picture. It doesn't show a clear path ahead.
Now, you spend, obviously you live in Europe, you've been traveling to Japan recently and to the United States, so you sort of have a picture of all the three legs of the stool, Asia, Europe, and the U.S. What sticks out to you? Is it fair, what many have been saying, which is that Europe might have some of the biggest issues still in front of it, particularly in the banking sector?
No, I really have to confess my ignorance. I really don't know whether that's not my expertise at all. But what I can tell you with some level of confidence is that our business, is doing well in all three locations. So the managed futures industry is actually, was one of the sort of poster children of last year and is thriving, particularly in Japan.
And you've been saying, but people have been, there have been net inflows, and people have not been taking their money out.
Well, the hedge funds have taken money out, but there are still inflows that have balanced those. And whilst our industry has shrunk a little bit, we made money for investors last year, and so some of the inflows have been made up for by profits that we made in the markets.
All right, so where do you see the greatest opportunities right now? I mean, obviously you said you're long and you're short, and it depends on the area, but where do you see some of the greatest opportunity?
It's difficult to say. Our investment technique works over the long term. We just keep at it over the long term. We can't forecast short-term market moves. We know we can't forecast short-term market moves. If we have an advantage, it may be because we know we can't forecast short-term market moves and we don't rely on that. So we have some long positions in commodities, long the Australian dollar. We're still short stock markets, but not in a big way around the world. We have a small net short position.
So that bet on commodities and something like the Australian dollar, that could be a much longer term view of where the world is going.
It could be. If there's a renewed uptrend, we will be long, if it's long enough. If the markets go sideways, we will lose money. This is the way it works. If there isn't a clear trend, we lose money. If there is a clear, sustained long-term trend, then we will make money. So last year we were able to make money because there were clear trends, and obviously that we served our purpose. Our purpose is to be a diversifying investment in people's portfolios. And obviously some of the things that were supposed to diversify didn't work out so well last year. I'm pleased to say that we managed that bit of our job.
All right. Well, David, thank you very much. We appreciate it. David Harding. And as you heard, Mark, there are commodities and the Aussie dollar, which I would suppose would be a commodity trade in and of itself. Back to you.